we're looking at the spread chart now as the next trigger to generate not just upside in silver versus gold and upside in both of them, but silver going vertical versus gold
Right.
and possibly, probably doing what it did in 79 or doing what it did in 2010, 11 in terms of percent gain. So the key trigger right now to look at is not the price charts, not whether silver goes through $50. It's a relic, the spread chart. And we're pushing up toward it as we showed on the prior page. So anyway, this is what we're pounding the table over right now. Watch the spread.
Silver has once again proven itself as the most dynamic and explosive asset in the precious metals space. Over the past few months, its price action has been nothing short of extraordinary. After consolidating for much of the year, silver began to build upward momentum in a way that seasoned investors have seen before. Quiet, steady pressure, followed by sudden bursts of acceleration. In just the past 90 days, we've seen silver break decisively above resistance levels that had capped it for years, climbing toward new highs with conviction. This isn't a speculative frenzy. It is a market responding to deep structural forces that are aligning in silver's favor. At the heart of this bullish trajectory lies something that many overlook: spreads and momentum indicators that serve as leading signals for where prices are heading. Michael Oliver's work has consistently shown that spreads, the performance of silver relative to other benchmarks like gold and equities, are often the earliest telltale signs of coming moves. Silver tends to ignite when these spreads confirm a decisive shift in capital flows. We saw this in the early 2000s when silver began its climb from $5 to nearly $50, and we saw it again in the years after 2008 when spreads foreshadowed silver's explosive rally as investors sought safety in hard assets. Today, those same patterns are emerging with striking clarity. The question then becomes, how far can this move go? History tells us that once silver breaks free of long-standing ranges, the moves are often both sharp and sustained. With supply constraints tightening, industrial demand expanding in green energy and electronics, and monetary demand reasserting itself in a climate of debt instability, silver has a runway that could surprise even seasoned market watchers. When you combine these forces with the momentum readings Oliver highlights, the conclusion is clear. This is not a temporary bounce, but the beginning of a larger structural move. In his latest analysis, Michael Oliver goes beyond the surface to explain exactly why silver's spreads are screaming higher and what that tells us about the months ahead. Stay with us as we break down his insights. And if you find this analysis valuable, don't forget to subscribe and share this video with fellow investors who need to understand what's really happening beneath the headlines.
I know if you look at a price chart, a current price chart, arithmetic scale of gold or silver, you think, oh, wow, it's just gone ballistic. I got to take profits. Okay. The bigger context is totally different than what you see on that screen. The screen looks like, yeah, I've gone ballistic compared to the price action that prevailed over the last couple of years, which is more layered. In fact, there was a period just April, May, June, July, August where gold was dead sideways. Okay. But this chart's very informative. I'm possessed by it, okay? As a technician. This shows silver price on a logarithmic or ratio scale chart. So, I've shown the period in 79 and 80 where silver, after going up for several years, went vertical, okay? And then there's the period in 2010, 11, the green arrow and the lines, where you've been going up for years, and then in the last 2 quarters, you went vertical, okay? We've been going up for years, just like those, okay? Not vertical, arm wrestling all the way, torturing people, monthly consolidation periods, corrections, all that stuff that goes with the normal arduous bull market. We argue that you're at the gate of going vertical. And forget momentum now. We'll get into that later. And the key trigger for this, we'll get into in a second. Just looking at the price charts, a log scale. If you measure what happened in the last 6 months of that vertical move that peaked in 1980, that's the red up arrow with the two horizontals showing where it started and where it ended. 6 months, you went from like $8 to 50. Okay. So we mark that distance on the log scale chart there. Okay. Forget that. Now let's go to the 2010-11 period. where you also went up to the $50 level. And in the last 6 months there, between the green horizontal upper line and the green horizontal lower line, you went up X amount there. Okay, we mark that with the green arrow. Now, when we take those two arrows, the green arrow showing the logarithmic dimension of that move, 2011, and the red arrow to the 1980 peak, and move them over to the present. At the present price, if you go vertical, and I'll give you that argument in a minute, equaling the 1980 surge, 79.80 surge, you go up to $200 or so, logarithmically. And if you match the move from October 2010 to April 2011, where silver went from like 20 something to 50, silver's going over 100 to match that ratio scale over in the next handful of months. Okay. Now, what's going to cause this? Well, aside from the certain fundamental arguments and also the fact that silver ain't going to stop at a triple top, guys. Okay. If you want to sell at 50, go be my guest. You'll be buried. Okay. The question then is, though, once we get through that silly nonsense level of 50, because frankly, it is nonsense because it's so many years ago that in real dollar terms, factoring in the degradation in the real buying power of the US dollar, remember it doubles and almost doubles in quantity every decade. So it's a junior version of the Weimar. Okay, silver would be $200 just to match the 1980 high or something. Some number like that. Okay, so silver's been suppressed. Gold's way above its 2011 high, way above its 1980 high. Copper's above its 2011 high, and yet silver's supposed to stay below it. $50. Oh yeah, right. Bet on that. Anyway, we're arguing that we're going to break out, and the key for the breakout now is not whether silver's in an uptrend or a downtrend, because it's already been going up for a couple of years now, right? Okay, no question about it. Different manner of rise, but still rising constantly. What's going to cause it to go ballistic? That's simply every month, where is the price of silver? Divide an ounce of silver into an ounce of gold and express it as a percent. Okay. We go back to late 2019 and you see the surge into 2020 where silver beat gold on the upside. The black line went from like under 0.9% up to 1.5 something percent. So a big percent move. That's like silver went from 15 to 30 during that time, and gold went up about $600, but silver doubled. Okay. So the spread outperformed, silver outperformed gold. But since that high in actually early 2021, silver has been giving back relative value to gold. Okay. It actually dropped back under the 1% level early this year. In a sense, you could see shot up nicely now on the spread chart. Now, right now, the spread chart's above that downtrend, but we prefer that horizontal red line. This is the top chart again. Top chart right here. This is the spread itself, which is price versus price expressed as a percent. I want to break out over that red horizontal. That means getting the price of silver versus gold from where it is right now, which is 1.23% approximately, above 1.31%. Then that spread has a triple top breakout over a base that goes back about 2.5, 3 years.
Yep,
so it's technically important. Okay. Now, when we run momentum of the spread, which is the chart below, let's measure what it measures is each of those monthly spread closes in relationship to a 10-month moving average. Okay. It has the same triple top, except you're at it.
We are right there.
Yeah, momentum is over to the right, is that third hit on the red line. 3. So momentum is at its triple top breakout, which usually occurs first. Momentum almost always will break out into a new trend direction prior to price. Okay. We closed right at it the end of yesterday, the end of the month. Okay. Now, it doesn't take much to break that momentum through, and it doesn't take much to actually break the spread chart through. It's the most important technical out there. And if you think silver and gold have been going, quote, vertical lately by looking at your arithmetic daily chart of the last year or something, you're wrong. You haven't even begun to see it yet. And I think it's about to happen because, again, momentum is back to that triple top. It ain't going to stop. And when it goes through, the spread will go through as well, in which case, set the clock. The next couple quarters could be meteoric, and silver may end up it will likely end up in a new price reality rather than this $20 to $50 range it's been in for 50 years. Okay.
Right.
Copper's above that range. Gold
Right.
is well above that range.
Right.
Silver's about to catch up.
Michael Oliver's first point sets the tone by highlighting the strength of silver's momentum relative to its historical averages. This is not just about chart patterns, it's about the underlying character of price action. When silver outpaces key moving averages and sustains those gains, it creates a self-reinforcing cycle where investors who were waiting on the sidelines are forced back into the market. That's exactly the type of action we're seeing now, and it provides the groundwork for the bullish case he continues to build. But Oliver doesn't stop there. He frames silver's breakout within the context of broader capital shifts that are simultaneously weakening confidence in traditional safe havens like U.S. Treasuries and strengthening the role of real assets. This sets up the deeper discussion of why spreads, particularly against gold and equities, are so important right now. As those divergences widen, they provide hard evidence that silver's strength is not a fluke, but part of a larger systemic trend. This foundation prepares us for the rest of his analysis, where he connects these market signals to long-term outcomes.
Do you expect silver to ever come back down again, or is that it?
Yeah, well, it'll come down again, but it'll come down from a new reality. In other words, in both of those moves, if we further examine them, I don't have the charts here, but if you go back to that 79 to 80 surge at the tail end of that bull market that had been underway since 76 low. Okay. In the last 6 months of that move, there was actually a correction in the middle of that move. And
I
no
can bring it
doubt,
up again if you want me to.
if you can, you won't be able to see that on the log scale, I don't think. Well, yeah, you could see it in 2008. There's an example there. You'll notice about 3 months after the green circle, where silver surged from just above 20, it surged up to over 30. Okay. You had a bad month. No, the middle chart,
Middle chart right here.
the price chart. The middle one, silver, is the middle chart. That one there. 3 months later, you surged. Then you had a bad month in January of 2011, where you had a straight down month. 3 months after that spread breakout, you had a surge in price, but you had a bad month
Right
in
here.
January.
Yeah.
No doubt everybody thought, oh, that's it. It's a blow off and you're through. Then you turned and the next 3 months you went berserk. Okay.
Yeah, I think
Same
that's a great
thing
point.
happened in 79 to 80. There was a pause in the middle of the move spanning about 5 to 6 weeks where it looked like, oh, golly, it's topping. It was just taking a breath. And then it tacked on the rest. So it was the 3 months, wobble around, confuse, then get there. When you get to the new reality in silver, and it could be, my guess is it's going to at least be 100. It's quite probable, possibly could be 200. That's a new reality. No, that doesn't mean you're going to stay up there. You can have a sell-off, but you're not coming back to 50. Your sell-off might be from 200 to 125 or something. You're in a new reality on silver then. The key is participating in the move into that new reality. And I think it's not going to be one of these things where you get to casually judge it along the way, if you know what I mean. If you're
Right.
not there, you're not there. Okay.
Right. So in your opinion that's the move you want to get there for that move, and then you
Yeah.
can
After that,
reassess.
who cares? I mean, you've done
Right.
it, especially if you're using anything with any potency of leverage, with futures or call options, especially. Uh, Again, the key is that spread. And that's our primary technical focus week by week in our reports. In fact, we're going to put out an update this afternoon on that. And I break it down into a weekly situation as opposed to monthly closes because we're pressing at the levels that are key. And if you can get through them, it begins.
Kitty bar the door.
Yeah, and you don't need a headline. The reasons are built into the market. There's decades of underpricing of silver relative to gold, decades of underpricing silver relative to anything, the value of the dollar, not versus other currencies, but its real buying power, et cetera, et cetera. It made a mistake. Investors did. They let it get underpriced for too long and they thought, oh, that's the new reality. No.
Yeah.
It's just like, we see it with market tops sometimes. Like, you make a bubble top in a stock market and you think it's just going to go up forever. And it gets overpriced way too long. And when it corrects, it just doesn't correct. It collapses. It
Right.
doesn't need a new reason. It's the old reason that it's moving on.
Right. Talk to me about the miners here. What are you seeing in the miners?
Yeah, the miners were just like silver has, they've underperformed since 2020 relative to gold. They broke out on their spread basis about 4 or 5 months ago. And if you'll notice, when gold stopped in April with 3,500 high, May, June, July, August, dead sideways, GDX exploded.
Right.
The miners exploded. So when the spread broke out, it showed itself, especially even in the net price of the gold miners. They went vertical. You took even Newmont went from $50 level, it's up to 84 in a heartbeat. New all-time new highs. Okay, and people gave up on it. And in 5 months, excuse me, yeah, about April it started to turn. So a handful of months, it left the page and made a new high.
Right.
Did it need a reason? Yeah, the reason was it was underpriced in the first place. Okay.
Mhm.
So anyway, that's what we're facing. And the miners, our expectation based on long-term spread analysis is that they could double to possibly triple in relative performance to gold. So as gold continues up, the miners will continue to beat it by large amounts. And when you go back to the 1980s, and look at relative performance of where gold, silver miners were in relation to an ounce of gold, like XAU index, for example,
Mhm.
you could triple its, we're right now pushing 8%. You could go up to 17.5%, more than double from where you are now, just to get to the underneath side of the multi-decade range it prevailed in the 1980s, 90s, and into 2000. So that's how cheap they are. And their relative performance, they could ventilate on the upside in terms of place to be.
Picking up from where Oliver leaves off, the message becomes unmistakably clear. Silver is entering a phase where structural demand, constrained supply, and momentum-driven capital flows are converging in a way that could generate extraordinary upside. Investors often look for confirmation in the form of headlines or short-term data, but the real confirmation is already here in the form of spreads and momentum indicators that historically precede some of the biggest rallies. Silver is not just reacting to today's economic uncertainty, it is positioning itself as the metal of choice in an environment of systemic fragility. It's also important to understand that silver's role extends beyond price speculation. With industrial demand projected to grow substantially due to electrification, solar, and energy storage, we are looking at a market that is already operating under supply pressure. The Silver Institute has noted that deficits are widening, and when you combine that with surging investor demand, the available above-ground stock simply cannot keep up. That dynamic creates the perfect storm for sustained price appreciation. Meanwhile, monetary dynamics continue to tilt the scale further. As central banks accumulate gold in record amounts and the dollar faces renewed scrutiny in global trade, silver benefits indirectly as a secondary monetary metal. In previous cycles, once gold establishes a firm uptrend, silver not only follows, but often outpaces gold dramatically in percentage terms. That pattern appears to be reasserting itself, with silver showing stronger momentum gains than gold over recent months. Investors who recall the 2010 to 2011 rally know how quickly silver can leap ahead once this phase begins. The final piece of the puzzle is sentiment. For much of the past decade, silver has been ignored or dismissed as a volatile afterthought compared to gold or equities. That very lack of enthusiasm has built the foundation for today's rally. As momentum strengthens and spreads widen, we are likely to see renewed participation from institutions and retail investors alike. This wave of capital, layered onto structural demand, could push silver far beyond levels that most currently expect. The bottom line is straightforward. Silver is no longer a quiet trade hiding in gold's shadow. It is a market leader, supported by momentum, fundamentals, and historical precedent. Michael Oliver's analysis underscores that this is the time for investors to pay attention, not months from now when headlines finally catch up. If you've been waiting for confirmation, you have it. If you've been waiting for clarity, the spreads have already spoken. Thank you for watching, and if you found this analysis helpful, make sure to like this video, subscribe to the channel, and share it with those who need to hear what's really happening in silver.